The S&P 500 dropped 1.5% this week. The Nasdaq fell 2.9%. But the real story? Semiconductors officially entered a bear market. And oil? It ripped 14% higher in 5 days. Two trades, completely opposite directions. And both of them are trying to tell you something. If you're new around here, do me a favor. Hit subscribe. The free weekly market note is linked in the description. No paywall, no spam, just the note. Let's run the week that was. S&P 500 closed at 7,458, down from 7,575 last Friday. Nasdaq finished at 25,520, down 2.9%. But those headlines don't tell you how the week actually felt. Monday through Wednesday, the market was digesting. S&P basically flat. Traders waiting for something. Thursday, chips started cracking. Then Friday happened. And by Friday happened, I mean a Chinese AI startup named Moonshot dropped a model called Kimi K3, and the entire semiconductor complex got repriced in a single session. Here's what Kimi K3 is and why it matters. Open source, 3 trillion parameters. Performance on par with GPT 5.6 and Claude Fable 5. And the punchline, it costs 40% less. Shamath Palihapitiya put it bluntly. The math doesn't work anymore. 1M tokens on Kimi costs $50. On a comparable US closed model, $56. That's not disruption. That's a demolition of the pricing power that justifies trillion-dollar AI capex. The market got the message immediately. The Philadelphia Semiconductor Index, SOX, dropped 10% this week. That's the worst week since the April 2025 tariff panic. And it officially crossed the bear market line, down 20% from the June highs. Marvell, ARM, Intel, all down 30% plus from their peaks. Micron, down 30%. Western Digital and SanDisk, down 35% each. Even TSMC, which just raised its capex and revenue guidance, suffered a 7-day losing streak. Good news doesn't matter when the narrative is breaking. Pull up the SOX daily chart. Price closed at 11,674. The short-term trend is at 12,678. The mid-term at 12,340. The long-term at 10,658. Price is below both the short and mid-term trends. That's a textbook bearish alignment. The long-term trend at 10,658 is the last line of defense. If that breaks, the conversation changes from correction to something worse. Friday's volume was heavy. This wasn't a quiet drift lower. This was institutional repositioning. NVIDIA's daily tells a similar story, just less extreme. Closed at 202.81, down nearly 4% for the week. The midterm trend sits at 206.64, the short term at 203.64. Prices below both. The long-term trend, 198.30. Friday's intraday low was $197.97. It tagged the LT and bounced. That's a tell. If $198 breaks next week, the next real support is the lower channel at $186.77. Volume was 144 shares, elevated. Someone's defending that line. Question is whether they can hold it through earnings. Now let's talk about the chart that's doing the opposite of everything else. WTI crude oil surged 14.35% this week to 80.77. The Iran situation is escalating. Hormuz Strait concerns are back, and Brent is already above $85. The BCP shows price at $81.78, above the long-term trend at $78.95, but still below the midterm at $82.35. The short-term trend at $74.37 is now deep support. If oil breaks above $82.35 next week, $85 and then $96 resistance come into play. The market spent months ignoring geopolitical risk. That's over. Here's my read on next week. The Kimi K3 news isn't a one-day story. It rewrites the AI cost equation. If the best open source model costs 99% less than the best closed model, the entire trillion-dollar AI capex thesis needs a rethink. That doesn't mean NVIDIA is going to zero. It means the multiple the market is willing to pay for chip earnings is getting repriced in real time. Next week's calendar is the proving ground. Alphabet reports Tuesday after the close. Microsoft, Amazon, and Meta all report next week. These are the companies spending hundreds of billions on AI infrastructure. If their CapEx guidance shows any sign of slowing, or even just moderating, the chip sell-off accelerates. If they double down, the bounce could be violent. Either way, you don't want to be guessing into these prints. Risk board. NVDA holding $198 LT is the first line. Break it, and $186 is next. Oil above $85 changes the inflation narrative, and the Fed's already hawkish. SOX at 10,058 LT is the bear market floor. KIMI K3 means the AI cost debate isn't going away, and big tech earnings are the only thing that can stabilize this tape. Trade the setup you see, not the one you want. Don't chase the oil move from here. You missed the 14%. Don't buy the chip dip until someone shows you the capex isn't going away. Protect your winners. Cash is still a position. Trade safe.